Hello, welcome back to the series on the types of taxes. Next, we're talking about estate taxes. So I talked about this a little bit in some other videos, but today I'm going to be focusing on what are estate taxes and why do you need to pay them. So I'll tell you this. In Minnesota, if your estate is under $3 million, you don't have to worry about estate taxes. If you're single, $6 million if you're married. But if you have property and you have retirement accounts, and let's say you've got a rental, you got some land, you have received an inheritance throughout the years, your estate may easily surpass that. And so it's wise to consider this because estate tax in Minnesota can be taxed up to 15%. So what does this mean? Let's say your estate is worth $4 million and you're single. $1 million of your assets when you pass away will be subject to the capital gains tax. So you can avoid that by doing proper estate planning, but not a lot of people realize this. I mean, not a lot of people even have wills. Well, if you don't have a will, there's certainly no avoiding estate tax. On the federal side, the estate tax limit is $12.92 million for a single person, and then 25.8. What does that mean? That means that if you have assets that are under that amount, there is no estate tax. However, if your estate is worth over that, then there's a 40% flat tax on any assets that are above that. So I see a lot of business owners getting into trouble here because if your business is valuated appropriately, and in addition to other assets that you own and life insurance, mind you, that is another part of your estate, you may end up superseding those limits, and then your beneficiary or your executor, trustee, has to worry about paying the estate tax. Again, if you do the proper estate planning, there are ways to avoid this, and that's a part of the collaboration that we do with our clients and their attorneys.